Hello again, everyone. In this technical analysis of the stock market video, I call it the October crash because that's the window that we're in right now when major crashes have occurred in the past. Specifically, of course, we had a really bad one in the financial crisis, major sell-off that was occurring in the fall of 2008, 1987, 1929. And in this video, I'm going to compare and look at 1929 because the window and the timing and everything is eerily similar. And that was the last time that we were at a supercycle, Elliott wave supercycle high in the market. Okay, that was supercycle wave 3 peaking, and I believe we've just completed supercycle wave 5. Okay, and it's eerie that this is an exact 89 years, which is a Fibonacci number, exact 89 years since that last supercycle wave high. All right, so let's compare. So here we've got a line chart. And why do I have a line chart in here? I've got a line chart because what I've got in terms of data back in 1929 is just the closing prices. So that's what we're going to take a look at. So here's the closing prices. This is 1929. The high in 1929 occurred on September 3rd, 381.17. Okay, so about 30 days later, on October 4th, it had an interim bottom in here. And it's interesting that why am I noting that? I'm noting that because it broke this trend line, which was a trend line of about 2 years or so at least, and it covered 1928 into 1929. Okay, and then we pop back above it. Well, the same exact thing has happened here this year. We broke below this trend line. This is a 2.5-year trend line of the lows, closing lows of this last rally since January, February 2016. And we broke below it here on October 11th, and we bounced back and closed above that trend line on October 16th, 5 days later. This one occurred 6 days later. Okay, in terms of calendar days is what I'm looking at. And not really sure. They may have been trading 6 days a week back then. I can't remember exactly when they stopped trading on Saturday. But anyway, I'm focused on just calendar dates just to keep it simple. All right, so then what happens next? Well, then the market comes down and we get our first close below that October 4th low on October 19th. Well, when we come down here, we actually close right in here, just slightly above that low. And we didn't close below that October 11th low until yesterday, October 24th. By the way, today is Thursday, October 25th, and the market is open right now. Okay, this is trading. So you're going to see this moving around right now. So this is not a closing data point. Just be aware of that. Everything else are closing prices for the day. I'm doing this in the middle of the day. It's actually about 10:20 a.m. and the S&P 500 right now has bounced. It's up 38 points. So this point here is up 38 points in terms of the bounce. So we'll see where we close today. So the real question is, are we back in here if this cycle is similar? Are we in here or are we down here further? You could see what happened. The main thing, the other thing I want to point out, not the main thing, the other thing I want to point out is that this cycle, once it broke that low, was a very strong wave 3 down. They had 1, 2, 3, 4, and 5, okay? Very strong wave 3. What was this? 19 calendar days. And then we got a 2-day bounce, and then it sold off, and it came down here over the next, 13 calendar days. So that's about a little over 2 weeks, or about 2 weeks in terms of the last leg down. And that was 5 waves down. That was the first wave in the whole cycle down, a big zigzag pattern. So that was the key point here. So that's what I'm watching for. And the real unknown at this point in time is, are we 5 waves down now? Or has this been wave 1, wave 2, and we're doing that third wave and heading a lot lower? So if you are not watching this on my website, head on over to joehenches.net and sign up for free updates twice a week. Everyone have a great rest of the day, and we'll talk to you on the next video.